In Lesson 11.3, we're going to be accounting for the declaration and payment of a dividend, explain the relationship between retained earnings and dividends, and account for the declaration and payment of dividends. Stockholders' equity accounts used by a corporation. Capital stock, paid in capital in excess of par, retained earnings, dividends, and income summary. An amount earned by a corporation and not yet distributed to stockholders is called retained earnings. Earnings distributed to stockholders are called dividends. A group of persons elected by the stockholders to govern a corporation is called the board of directors. Action by a board of directors to distribute corporate earnings to stockholders is called declaring a dividend. December 15th, 3 Green's board of directors declared a quarterly dividend of 5 cents per share. Capital stock issued is 75,000 shares. The total dividend is $3,750. Date of payment is January 15th. Memorandum number 43. Dividends is increased with a debit. Dividends payable is increased with a credit. So you put the date, the 15th. Dividends is our account that's debited. Put M43 for our document number. The debit amount, $3,750. Our account credited is dividends payable. The amount is $3,750 credit. Paying declared dividends. January 15th, paid cash for quarterly dividend declared column. Our dividends payable is decreased with a debit, and our cash is decreased with a credit. You put the date, 15th. Dividends payable is our account title. Check number, 742. General debit amount, $3,750. Cash credit amount, $3,750. Under what major chart of accounts division are the owner's equity accounts for a corporation normally listed? Stockholders' equity. Why is only one account maintained for the investment of all owners of a corporation? Most corporations have many stockholders. It is not practical to have a separate owner's equity account for each stockholder. Which account does a corporation use to record earnings not yet distributed to stockholders? Retained earnings. How and when do net income and dividends impact permanent stockholders' equity accounts? At the end of the fiscal period, temporary accounts are closed to retained earnings. Net income increases retained earnings. Dividends reduce retained earnings. What action is required before a corporation can distribute income to its stockholders? The board of directors must declare a dividend.